All right, good morning, everybody. For those of you that are new with us or signing on, I'm Tim Eliason, and I'll be your online instructor. Those of you I met last week, actually some of you have been into the office and I've met in person, which is always kind of nice to know the name and the face that go together on an online class, okay? Um, Logistic thing is homework has been coming in, has been great. We're going to talk a little bit about, I know some people have had some questions about getting the problems in, how to print to a PDF and send those problems in. I'll go through that today a little bit more specific, and that way it'll be here on the recording so you can go back. I know I sent some sheets out to everybody with some additional materials that had some things. I hope everybody got the additional materials with the shortcuts for the keyboard, because I use those quite often. I'll talk about them. It has the, if you choose to, back up or I'll walk through that today, but where you can put your problems on a thumb drive, especially if you decide to come in, you want us to sit down with you here at our Colvin office. I'll show you how to do that again today. So backing up down to the thumb drive so you can travel with your returns. Obviously, whatever computer you go to, you still have to have your TaxWise on there, but kind of show you that. It's kind of quirky. As Bob told our classroom sessions, TaxWise is really not set up to be a school instructional student type software. So we've had to make some tweaks to it, and it doesn't work exactly the way we would like for a setting like this, but we try to work around it best we can, okay? As far as homework, great coming in. I realize, again, this first week is a lot of logistical stuff for everybody, trying to get things in, get everything understand. Everybody's done a great job. I know I gave you a lot of stuff to put in. We're going to talk about a couple of the problems that we assigned. I just want to go through them where you've done them on a form by hand, and then we'll talk about, see if anybody had any questions about the quizzes. I did not write the textbook. I helped edit it and review it. I know some of the questions, you almost feel like there's more than one correct answer. And, sometimes you just have to go to the bare essence or what the intention of the question is to get the right answer. You would hope each question you had a lot more backstory sometimes when you're talking on items about, filing status or whatever it may be, but we just have to kind of go with just the intent of the question, okay? Okay, all right. Okay, and I had a text from one other person. They must have the same update. They said their computer's running some sort of update. Must have been the day for Windows, so. All right, so we'll kind of talk about that. So usually what I do is after, like I said, the first class, but what we'll do is we'll kind of go through what the homework was. Like I said, I have specific exercises that you were assigned. Most everybody has turned them in, look great, doing a nice job with getting those in. We'll talk about one of the problems, kind of builds off one of the exercises that I had for you. So we'll kind of do that. And then we'll get into new stuff. We're going to be covering chapter 4 and 5 today. So we'll be doing that and doing some more problems. Like I said, it's sometimes, we're condensing a lot of the material. So I'm going to be going through a lot of stuff fast. But if I can get through the material in the textbook for you, get the law, the gist of what I want you to really be aware of, the important parts, then we can spend time in the actual tax returns, seeing the forms that we're doing by hand in action, and also talk further about the tax law, because when you see it happening in the tax return, you're going to be able to see a little bit more how that tax code is actually intended to work when it comes onto somebody's tax return and things that you do there. Okay. All right. As far as the homework, we had assigned you some ones out of the exercises out of chapter 2. Again, a lot of them were good. Everybody did a nice job on everything about, the qualifying child, the support test, everything like that. One thing I will say, And for those of you that have somewhat read ahead, I had a realization about this last year and I felt awful. I had a older gentleman in one of my classroom sessions that we were about 2/3 of the way through the class, and one of his fellow students said, well, I just checked my answers in the back. He goes, what do you mean? Well, for those of you that have taken a look at the books, if you go to the end of volume 2, all right, there is the answer key to the exercises and quizzes, okay? So it is there. And I felt awful that I didn't bring it up at the outside of the class so that he, you know, if he was unsure of some things he was doing and he wanted to check his work. Obviously, I'm asking you to try to do everything first before you would do anything where you would, you know, go back there and look. But I just want you to be aware of that the answers are back there. One thing it does allow us for the online is that some of the ones that, you know, or maybe multiple choice or some things like that. Obviously, we want to spend more time getting through material than just going through the answers. But like I said, there's certain exercises that I do emphasize that I will talk about. So for all of you that have not realized that is at the back, I'm sure right now you're frantically going to it going, what do you mean there's answers in the back? Okay. So, but like I said, I felt awful when the gentleman that was in the class and everybody else, you know, but he had done great work. So, you know, he was doing just fine. Okay. What I would like everybody to do is go to chapter 2. Let me get it up here. And again, I'll be sharing the screens here. So, okay. And we'll be doing that. Chapter 2. Let me move myself here. Okay. So in chapter 2, there is a problem or an exercise, I should say, that I had you do. There was an example that was done first here on page, okay. It was one that was an exercise that we did on support with a calculation. There was an exercise there that they had completed for you. But on page, what do we got here? 2-25, we had exercise 2H that we had that was for determining support. You had to do the form by hand. This form's not in the TaxWise software, so you know if it's the case that you're going to have to determine support. You know, a lot of the offices have this form either printed for people to use. You know that there's a folder of them in the office. Or they have it saved on their desktop, whatever it may be. But it's a good one just to kind of go through. Doing a couple of these, you're going to get pretty good, for lack of a better term, at the old eyeball test. You're going to say, boy, you know, seeing these numbers and, you know, I know from looking at the example I just went by on the previous page and doing this one by hand, you can kind of get a feel. You know, if we're going to put mom or a relative other than a child or even a child that has aged out, that maybe is not in college, and we're trying to determine if they can be on the tax return, that we'd be able to do that, okay? So we have Jeffrey and Chloe's mother, Angela, lives with them. Angela is getting $69.87 of Social Security benefits. She's using $3,000 towards her support. She also received $600 as interest income, which, you know, she must have quite a bit of money in the bank or some pretty good investments, but she had $600 as interest income she left in the bank. You know, for the exercise here, again, not a lot of backstory, so we're pretty much going to have to say that, you know, we don't know the balances in the bank. We're just going to have to make the assumption that we're just going to go off the numbers that we have. She also received a small pension for the year, $1,555, which she deposited directly into a savings account. She spent the remainder of her money on senior citizen activities, and she is going to bingo. Goes through some expenses there that were paid by Jeff and Chloe for the year. Again, these were not paid by Angela. These were paid by Jeff and Chloe. All right. We have the rent, $1,250 per month. Utilities, $1,200 for the year. Repairs, $1,640 for the year. Some clothing for mom, $520 for the year. They helped out with some of mom's copays for $300. They paid her life insurance for $222, and and entertainment for the family $1,200 for the year, and food eaten on premises $1,333 per month. So obviously they show that in the house there's a family of 6, so they got a pretty good grocery bill going. Okay, all right, okay. So we were going to be completing the form here for the support. So we'll kind of go through this, and I'll kind of give you the lines and where those numbers came from. All right. Enter the total funds belonging to the person you supported, including income received, taxable and non-taxable. All right. And amounts borrowed during the year, plus the amount in savings and other accounts at the beginning of the year. Do not include funds provided by the state. Include those amounts on line 23 instead. Okay, so it's just telling us, and this is kind of a typical IRS worksheet. Again, this worksheet is not in the TaxWise. It's just something that you would do, and if you do complete one of these for somebody because they're inquiring as to whether they should put mom on the return, you can put that on there, put that in the paper file, or you can make note, in the diary. We'll talk about that. That'll be attached to the tax return that goes forwards year to year, that you can put that note in there and says, hey, I did a support test for mom, she passed, kind of a summary of what was said, and again, we'll show you how to do all that. Okay, all right, so starting out line 1, those funds belonging to the person, that total is $9,142. Okay, so $9,142 on line 1. Enter the amount that was used for the person's support. Okay, that's the $3,000 that she talked about. Okay, we have enter the amount of the line 1 that was used for other purposes. Okay, that really is of her Social Security income. That is at other purposes, the difference between the $69.87 less the $3,000 she used for herself. So that's what that number is for number 3. Enter the total amount in the person's savings and other accounts at the end of the year. Well, it talked about the fact she put $600 interest and her pension, $1,555, that she put into her savings, into her accounts. So line 4 will read $2,155. All right. When we add those all together, that's where we get $9,142. All right, so as it says, add lines 2 through 4, and they should be equal to line 1. So that's kind of an exercise for us, really, to break down, how that money and what it's being used for. Okay. Expenses for the entire household. Lodging, you have 2 lines. You have an A and a B. In this case, they were paying rent. We have the monthly rental amount, so that works out to $15,000 for the year. Okay, all right, because they are paying $1,250 a month for that rent. The B, where it says enter fair rental value of the home, if it's the case that it's the person's home and they own it, say that they're paying a mortgage or whatever, you just have to come up with what would be called fair rental value. I guess best case scenario for you to research that and come up with that number, you would just go online and go to apartments.com or houses for rent or whatever it would be, and see if there's any houses that have rented in the area that are similar value, and then use that number for that that rent. Okay, in this case they're renting the house for $1,250. Okay, we have food expenses on line 7. Food eaten on premises was $1,333 a month. So we multiply that out for the year, $15,996. We had utilities of $1,200 for the year, so line 8 is $1,200. Okay, all right. We had repairs. Talks about repairs to the house, $1,640 on line 9. We had line 10, other expenses, nothing there. Okay. As it says there, though, do not include the expenses of maintaining the home, such as mortgage interest, real estate taxes, and insurance. Again, if it's a house that somebody owns, we're going to use that line 6B, where we're going to take the fair rental value and determine that lodging expense for that. So, you know, other expenses would go on that line, but do not include things that would be mortgage interest payments, real estate taxes, things you might see on a tax return. So let's see, we have line 11. We're adding up our total expenses. So we got 33,836 on line 11, and total number of people in the house is 6. Okay. All right. So now we're going to get into the expenses for the house, for the person you supported. In this case, it is Angela, Jeff and Chloe's mom. And when we got into that, we put that in there. And we have the first line, it says divide 11 by 12, or excuse me, line 11 by line 12. So we're taking 6 people for our expenses for the entire household, dividing that in. And in there we have 5639, okay? Clothing, they said that they bought clothing for mom for 520 on line 14. Mom is not going to school, so there's no expenses for education. Line 16 talks about total medical and dental expenses not paid, you know, by insurance, or reimbursed by insurance, I should say. And they paid $300 in copays, which makes sense. Those are not reimbursed. Okay. Travel and recreation expenses. All right. That would be what they said was entertainment for the family for $1,200 for the year. Well, you know, we had $1,200 for the year for the entire family, but again, family is 6, so we have to divide that by 6. We'd get 200 on line 17. No other expenses for the person there. And then we have the total support for the year is $66.59. Hold on one second. Got a question here, came up on the chat. Give me 1 second. All right. Let's see, line 8, 1,200. Okay, 1644. So let's see, Marty came up with 3536. 35,036. All right, let me take a look here. 1 second, Marty. Let me see if I can figure out the math that went on there. Okay, so 1,200. What did you, let's see, which made for 35. So let's see. $1,200. Okay. So utilities for line 8. Okay. Marty, what did you have on line 10? Oh, okay. Yep, line 10 should, or line 11 should be 0. That's correct, that there's no other expenses there, okay? So, because that's, your difference is exactly 1,200, so don't put that 1,200 in there twice. That should be just for that one there, okay? So that's where we got the 3386. All right. Expenses for that, because is anything that that's not yet, because that's ones that should be not included there, that expenses for the home and stuff like that, because that's going to go specifically to the support of mom. Okay. All right. All right. As we said there, line 16, we had the medical, we had we took the 1,200 for the family divided by 6. No other expenses there for the person. And then on the total cost there, if for the support for the year, we have $66.59. Okay. And then on line 21, it says we have to multiply it by 50% or divide it by 2 or whatever you want to do. With rounding, that gets us on line 20 to 3330. Enter the amount on line 2, which if we go back up, we put 3,000. That's what she used for her personal reasons out of Social Security. Okay. Now, our next question on 22 is line 21 more than line 20? All right. And in this case, it's no. So when we answer no, it says you meet the support test for this person to be your qualifying child, which we know it's mom. But as it goes on to say, if this person also meets the other tests to be a qualifying child, stop here. Do not complete lines 23 through 26. Otherwise, go to line 23 and fill out the rest of the worksheet to determine if this person is your qualifying relative, which we have to do, okay? So we go down, did you provide more than half? Well, enter the amount others provided for the person's support. There was nothing, so line 23 is 0. All right. Let me scroll down here a little bit. Okay. Line 24 says add lines 21 and 23. When we do that, we get the 3,000. Line 25 says subtract, line 24 from line 19. All right. And then this is the support that you provided, the 3659. Then it asks, is line 25 more than line 20? And if you answer yes, you meet the support test for the person to be your qualifying relative. Okay, so in this case, from doing our worksheet here, we're able to see that we can take Angela on the tax return and use her as a qualifying relative, which when we talk about credits, that would get her the other dependent credit, which started in 2018, which would be a $500 credit for having her on the tax return. Okay, all right, that would be a non-refundable credit. Okay, all right, so that is the exercise there. Okay, all right, okay. Next one, what we're going to do is I had assigned you, one second here, so I go back and forth between the screens. All right, we're going to go to chapter 3. Okay, and in chapter 3, we're going to go to page, let's see, why don't you go to page 323. That was kind of the example one. So we'll go to 323. All right, and this was where we talked about tips, the fact that they have to record tips, okay? So on 323, kind of has an example of the 4137, okay? And that 4137 is where when we take a look at the W-2 that was on the previous page, that was for Randy Lewis. He's working at the Lamp Post restaurant. It showed how when we pulled the information off of his information that you know, he would be able to calculate here, and this would be for unreported tip income that we would have to calculate on the tax return for him, his Social Security and Medicare tax. Okay, all right, okay, so what we're going to go through is actually we're going to flip over to the next page, 324. Okay, and down at the bottom of 324, we have our friend Olivia Boyd. She's working at the Blue Dolphin. And I found out from one of my classroom classes, one of the individuals in there, I guess there truly was a restaurant named the Blue Dolphin. It was a phenomenal restaurant. I can't remember where everybody said it was, but this one really existed somewhere in this area. So this one, I guess, for an example, has some reality to it. But we take a look at Olivia's W-2 here. We can see in box 1 she has her wages. Then we see in box 3 that those wages are decreased, and the remainder of that balance that's in box 1 is down in box 7 for her Social Security tips. Okay. Also, we see a number in box 8. All right, that's allocated tips. Now, when you go to do the 4137, and we're going to see it in action when I do the problem that we're going to do, I'm going to go through the problem that was assigned out of the workbook in chapter 3. the thing about box 8 is a lot of times when somebody's trying to do this exercise with the form 4137, because the allocated tips, that 1201 is on the W-2, does not mean that it is part of box 1, okay? It is reported there, kind of like something we might see in box 14 or box 12. So the 1201 is not in the amount in box 1, that 10,834, okay? So, you know, that's where sometimes people don't understand where the math comes from, where I should say the numbers to do the math, but that box 8 is not in box 1. It is just strictly a reporting box, okay? Kind of similar when we talk about things with dependent care benefits in box 10, but, you know, we'll kind of go through and see how we do all this, okay? So on the next page there, on 325, we have our 4137 that you were lucky enough to get to do longhand, okay? And with that being said, with the longhand, you know, obviously the header, you know, those things will obviously populate on your tax-wise, but, you know, I get to torture you for a while and make you do handwritten forms. So I know a couple students emailed me that are old school and did everything by paper with all the, even practice on the returns till their tax-wise gets up and going. And I commend you. I'm the same way, but the header has Olivia Boyd. We put her social security number in there. In that first section, the capital A, under the little a column, we got Blue Dolphin Restaurant. Obviously, off the W-2, we're going to put the EIN number in there. Okay. Total cash and charge tips you received, including unreported tips. Okay. So we have box 7. All right. That we have there. That's the 4609. Okay. We have in that number 2 is that allocated tips. We're going to add the 1201. Okay. All right. So we have that in there also. And then the other thing we have from the text on the top of 324, we have that Olivia kept a good record of all her tips. The amount that Olivia received in unreported tips was $120. No month was over $20. Remember, we talked about the fact that if there's a month where you do not reach $20 in unreported tips, you do not have to report them. But in this case, we're going to have to add it in there. So we get that 5930 is the number that we have in column C. Okay. Column D is our total cash and charge tips you reported to your employer. That is box 7. Okay, so box 7 goes in D. That's where we have 4609. All right, so next in working the form, we go down to line 2, and we just, you know, obviously if they had more than one place that they worked as a server or bartender or had tips or whatever it may be, we'd add. But in this case, line 2, when we take that column down, we got 5930. And on line 3, we take column D down, we have 4609. Okay. Now, what it's asking us to do is subtract 3 from 2. That gets us that 1321. All right. So that is that box 8 allocated tips of 1201 plus the $120 and from unreported. Okay. Our next line says cash and charge tips you received but didn't report to your employer because the total was less than $20 in a calendar month. You know, as it said in the text at the top of 324, no month was over $20. I think, as I said, I can't remember if I said it to the online class, but as I said to my classroom, if somebody's working as a server in this day and age, and they're making less than $20 in tips where they're working, they either need to find a new job or a new profession, because $20 is just not a lot of tips. I don't know why that number's never been adjusted for any reason, but it's kind of a, seems like it's an outdated number, but that's the number we have to use. So the $20, that's the 120 on line 5. And then on 6, it says unreported tips subject to Medicare. Subtract 5 from 4. All right, so we're at 1201. Okay. Line 7 has that number that was in the text. That's that maximum amount of wages that are subject to Social Security. Remember, we talked about the fact that there is a maximum number that Social Security will be calculated on. If you work for one employer and they pay in too much Social Security on your behalf, so they pay in Social Security over the $128,400 income, then you have to ask that employer for that back. If it's the case that you work two jobs and the sum of your income from the two jobs added together is over that 128, then good chances your Social Security tax is over. So being two separate employers, you're able to ask for that money back on the tax return. So one employer, you go to the employer if they took out too much Social Security. Two or more employers, you do it on the tax return. Okay, I know that was a question that was in the quiz. And so we have that in there. Okay. For that number on there, just remember that that number is any amount over $7,961. Okay, so there was a couple questions from the quiz that talked about excess Social Security. It's a good one to have. Again, your software will pick up on that from what you put in the W-2, but when you see something pop like that, hey, where did that number come from? You need to be able to explain to the client, hey, you paid too much in Social Security, you're getting it back. Or when you're putting that W-2 in there and you look at that box 3 and 4 and you see that it's over that $79.61, then you need to make sure you tell them, hey, your employer owes you money. They took too much out of your check. Okay. All right, line 8, that is basically box 1 from the W-2. That is our $10,834. We're supposed to subtract that on line 9. Line 9 is subtracting 8 from 7. That gives us $117,566. And then on line 10, unreported tips subject to Social Security, we're supposed to pick the smaller of line 6, which is 1201, and line 9, which is $117,566. So obviously that's the 1201. We see the rate for Social Security tax and Medicare tax on 11 and 12. That's $74.17. Add those together on line 13, you have $91. So that flows over to Schedule 4 as part of the 1040, and on line 58, and you put the $91. So they will pay $91 basically on that allocated tips. Like I said, the big reason I want to go through this, I want to make sure people understand that that box 8 needs to be calculated, needs to be entered. All right, it is not part of box 1, so there has not already been Social Security Medicare tax calculated on those allocated tips. Okay. All right. So we have that one in there. Okay. All right. Okay. All right. Now, while I'm getting some things set up here, if you want to grab your workbooks, I'm going to actually, I know we assigned, let's see, I assigned you problems 3.2 and 3.3. We're actually going to do problem 3.3. I'm going to do that on the screen as a share. All right, so give me 1 second here. And get my TaxWise open. I had it open before the update, but if you can go on your workbook, it's page 311. It's the problem number 3.3 for Russell and Judy James. Okay, so we're going to be doing this one. I'll be doing a share screen here. Well, let me get TaxWise open. This will be good for some of us that good review. Like I said, I'm going to do a lot of things where I'm going to talk about within the tax return, some of the stuff that you can do, some of the things with TaxWise. It'll be, since we're recording this, it'll be a good reference for you if you need to go back to see things. So. Okay. All right, so I'm going to share the screen here with our TaxWise. All right. So I've gotten logged into there. So those of you that have been able to get to work, I know I've seen a couple emails coming through that people are working. I think Bob has been make sure on the break to reach out to him saying that there's some people looking for some updates on stuff. But so we're in the TaxWise, like I talked about, you know, the buttons and stuff like that, you know, that we have across the top. The Pub 17, all right, that Pub 17 is available to you up there. Reminder that the only way it is accessible is if you are online. So if you are not hooked to Wi-Fi or whatever it may be, then that that button, that publication will not work. Okay. All right. As I said, most of the things here, you can see, I know for the student version, it's nothing there. But you can see here we get news, things like that. You know, they get some things where the IRS all year long is fixing various things, doing, you know, they reminded everybody that October 15th is the filing deadline, extended support hours. These are little articles and news and updates about things, especially as we get started in a tax season. There's a lot of things that are coming down. Last year, there was a ton of things in this box because of the new year with the tax law, where there were realizations by the IRS that some of the forms did not work quite like they should have. So, okay. All right, so we're going to start the new return. All right. And we're going to put the social in there. And actually, I'm going to use a little bit of a different one just because I know that it's in the system. All right, so we make sure we enter it twice. That little yellow triangle will disappear. We hit OK. All right. All right, and our software is up. Okay. As I said, you know, now all of a sudden we have access to more of the buttons. We're going to talk about those as we go along. Okay. Up at the top, you know, we'll use these sometimes. One thing I want you to be aware of is with View. Okay. With View, you can change your font. You know, obviously I have this one as big as possible for everybody. Okay. There's to get rid of the tree on the left is under View. You know, you can do different things just to change how the screen looks in front of you. I am a big tree fan, and I am a big refund monitor. That's the little blue box in the top left. Because as you're going along doing things, you know, as I've said to my classes, you know, you wish you had a heart monitor on the clients because they start watching that refund go up and down, and you know that their heart rate's changing. But you know, that's where, you know, you can kind of keep track. And when we go to do, and we'll talk about the what if mode, where you can do some things to try different things on the return. You know, you can tell them, hey, because of this, or if you did this, this is the impact it would have on your refund. And they can see it right there in that blue box. Okay. All right. So we're going to start right out there. We have Russell. Again, I've talked about the fact that, you know, make sure that we're typing everything in the capital letters. Okay. Okay. And we have James. Okay. And then we're going to put in, because the Social Security number is always, you know, under the primary or taxpayer. It does not matter which order anybody goes in. You know, when I have a new client, I just ask who wants to be the primary on the return. It's not any special order of any kind. It's just when that tax return is electronically filed, it will always be traced under the primary Social Security number, but the secondary, you know, the spouse or secondary Social Security number is still going to be part of the record. Okay. 123, we have Sibley Drive. Okay. When you put in the zip codes, it will default for that. I know some of them, it might say, the problem might say Williamsville. You put in 14221 and it'll automatically default to Buffalo. That's the way the IRS database is set up for zip codes. IRS sometimes doesn't recognize the villages that we have in the New York area, so that sometimes will not show up exactly, but as long as you have that zip code in there, you are correct, okay? We have the email address. Again, very important that you get that in there, okay? I cannot send a copy of the return to anybody unless I have an email on file. All right. And in this case, we'll just put the phone numbers under, for simplicity. Oops. Too many times on 6. All right. Again, birth dates, very important. When we get into talking about retirement accounts and the fact that if somebody's taking money out prior to their 59.5 birthday, the software will help us default that, especially on the New York side when we start to talk about things. All right, I have an engineer and I have a waitress, okay? As soon as I type waitress, the light bulb should go off. I think there's going to be tips. And while I'm typing the rest of the main information in here for them, I'm probably going to ask her, do you have tips? And so as I'm typing things, she can pull those together or get out her records or whatever they may be. All right. We're doing married filing joint. We have on here this special box 6A. You can be claimed on another person's return. Again, this is that box that is so important to check. If I am doing a college-age student that is still being claimed on mom and dad's return for the education credit, I have to make sure I check that box, all right? Because otherwise it creates a huge conflict in the e-filing. The child's return would go in, mom and dad would go to file, even an hour later, and it would reject their return because it would say the Social Security number's already been used as a primary. And then mom and dad have to send their return in paper, wait 12 to 18 weeks for their refund. We have to amend junior, take money back from them. So it gets to be very, I guess we can call it a tense situation, but obviously you want to maximize within the law, what the refunds can be. And that's a case where, that's a situation where that is the best scenario. All right. They have a child, Elaine, okay, that is on the return. So we're going to put that under the dependent. We have her date of birth. Okay. And she is 16 this year. Okay. All right. And we have her Social Security number. All right. And the relationship. So as you can see, as we're kind of going across here, we're doing all those things for those tests, to qualifying test. All right. And this is their daughter. Okay. Come on. All right. So we have that daughter, so we want to make sure we get the questions answered correctly. All right. They lived with her, or excuse me, Elaine lived with her. And as it says here, your child who lives with you. Now there's other options here. Okay. Sometimes what happens is we have, that option may be that your child who does not live with you. That can happen in a divorce where two parents separate. Kids, mom gets them on the even years, dad gets them on the odd, but only one can be the custodial or residential parent. They cannot live in both houses. So, and we'll talk about that later too. Okay. The column here that says DC, that is for dependent credit. That would be if there's child care involved. We have the EIC column. That is the earned income credit. Always check that one, no matter what. Okay, because that's a good one to have on there. Okay. And as you can see, since it's yellow, one procedural thing that I'll kind of bring up while I'm thinking about it is that anytime you have a field where it is green, the number or the space is green, that means you can type directly into it. Okay. If it is yellow, that means it's going to be calculated. Okay. So if I go down here below and it says the number of children who lived with you, and I try to click on that, and I try to type a number in there, I want to change it to 2, it's going to give me this error that says calculated entry. Right click to see the choices. Well, we don't necessarily want to do that, but we should know that because that number is there and it is yellow, it means that it was calculated or determined from either another part of the return or another form or another worksheet. And we'll talk about how those carry over when we see more of that in action, okay? ODC, if it was the case that Elaine had turned 17. So I'm going to go back and I'm going to change her birth date so she was born a year earlier. She's now 17. So when she reaches her in the year that she turned 17, she's no longer the child tax credit. She now moves to the other dependent credit, okay? And that's where she goes from the $2,000 credit at 16 to the $500 credit when she turns 17, okay? Identity theft PIN, again, that area is a 6-digit number. We see more and more of those because at times when, again, we have separated parents and there's kids involved, sometimes it becomes a race to see who can file the return first. And if somebody is fraudulently trying to take kids that they are not entitled to in that situation, the parent that is entitled to them may be issued an identity theft PIN. The IRS will issue them a 6-digit PIN so that they can put that on there in addition to the Social Security number so that they know that's the person who can claim. If the other person tries to do it without that PIN, they'll be denied, and chances are they'll be hearing from the IRS, okay? Down here where it says state information, again, full year, we're living in New York right now. When we start doing some other things, we'll talk about when we have some problems that I'll do for examples that I'll send to you. We'll talk about the part year and the non-resident. Type of return, we're going to be doing an e-file, okay? All right, don't worry about the bank information, fee collect, stuff like that. That stuff up here is for when you get into the offices, when we start doing e-filing and where they want the refund taken out, or excuse me, the fee for the return taken out of the refund. But we do have down here, we have, they want to do direct deposit. So the direct deposit information can go in. We have M&T Bank. We have their account number. Okay. This area here, most all these will be defaulted on your software as far as we're doing an income tax return. You can see here, there's that 4868 when we were talking about extensions. So if you're doing an extension, you would have to change the box, but for right now, we're just going to leave it in the income tax return. Down here, we have taxpayer's PIN, okay? Enter 5 numbers. For sake of simplicity, this is their electronic signature. Just use their zip code, okay? Do not ask them to come up with a 5-digit number. People will grind on this for 10 minutes trying to come up with a PIN number that they can remember. I just use their zip code. They're able to remember it. It will be on everything printed out, okay? And all it is that is their electronic signature. We have them sign a form, an 8879, that we have them form, or excuse me, that they sign with the signature that we keep on file. So we have a paper signature, but for the electronic filing. So we're just going to use, for both of them, we can use the zip code. We're going to put that date in there. Okay, they're going to authorize us to electronically file on their behalf. Okay. Driver's license, identity verification, again, for your practice problems, simplicity, just check those first 2 there, okay? And then check the first line. When we're in the offices, you know, we thought about putting driver's license information in the practice problems, but we didn't want you spending a whole lot of time. We'd much rather have you do other things when you're working problems with your time. So for right now, you know, we'll cover that when we get into the offices, all right? Down here, you'll come up with a prepare ID. You can do whatever you want. As you can see, once I put that in, it defaults with all of my information in there, okay? And then we have to, again, enter the date, okay? All right, so we got that in there. That's all off the main information page that's in there on page 312, okay? If you turn back to 311 in your workbook, we got a few bullet points. Russell and Judy filed a 1040A last year. Again, those don't exist anymore, but this is referring back to 17 from us practicing in 18. They're filing a joint return. We talked about direct deposit on their checking account. If they owe, they will send a check. We got to use the information off the main info that we just did. That fourth bullet says neither Russell nor Judy was a full-time student in 2018, nor did either receive a distribution from a retirement plan in the past 3 years. Those bullet points, you probably read it and you're going, what does that have to do with anything? Well, what that is, there's a thing called a saver's credit, an 8880. If they're contributing to a 401k through their W-2 and their income levels are at a certain level or below, then they would get what's called a saver's credit. They do not get that saver's credit if they are full-time students or they took money out of a retirement account, a distribution of a retirement account in the last 3 years. Talks about EIC. Again, if somebody lost the EIC in the previous year, then there's certain things we have to check on the return to say that they may not be eligible for it because they took it and they shouldn't have. Next bullet point, the entire family had health care for the entire year, okay? So on my tree on the left, you can see a little red exclamation point, and then you see ACA worksheet page 1. So we're going to click on that. This is, it's going to look much different on this one for, move myself out of the way here. This will look much different for 2019. Reason being is that 2019 is the first year that the mandate's gone. What that means is you will not have to show that you have health insurance because in 18, if you did not, there was a penalty, what they called shared responsibility, okay? So we're going to kind of go through this. Did the taxpayer get insurance through the marketplace? You know, that's not employer. The marketplace would be where they had a premium tax credit, the essential plan in New York or Medicaid, things like that. So check no there. The second one down, again, this question will more than likely disappear, but we're not sure because we haven't seen on this worksheet yet. But what we're saying on this one is if somebody did not have insurance for the entire year, then we have to talk about this. And we're going to cover more of this in, I believe, chapter 18, okay? As far as each line here, we're going to check the box, the first box after each of their names, saying, as the bullet says, they had insurance all 12 months, okay? All right, so we're going to go to the W-2s in your workbook on 313, okay? Now, I can get this W-2 several ways, all right? So I'm going to go back to my 1040 page 2, all right? First option, there's a tab up here. It says Add Form, Display Form List. So if I click on that, all right, it gives me, you know, my list of forms where it says Look For. I can type W-2, and as soon as I did that, you can see down here in the bottom in red, it gave me my W-2, okay? I can, knowing on my 1040 page 2 that I have wages, I can go over, light up my box. That little thing that I sent out with the shortcut, the keys shortcut for those of you that are more driven by the keyboard. If I go in there and hit F9, it gives me a list of options, and I can see the second one down there, wage and tax statement. So I can do the W-2 there, okay? All right. And lastly, I can go on my tree on the left, and I can just click because it'll always default with one W-2 on there. All right, so those are the 3 ways you can get that W-2, okay? All right, this case, our first one is for Russell, so he is our taxpayer, our first name. Check the address on the W-2, it is correct. I'm gonna go down and put in the employee ID number. All right, and in this case, because it's in the database, it defaulted, it filled it in there for me, okay? I'm gonna go over to the right, he made $73,005. All right, and he had tax withholding. All right, okay. Now, sometimes what will happen is this little box will come up red. It says, please verify federal withholding and all the other stuff. Basically, what that's saying is that the amount that you put in there is maybe outside of the parameter that they think is correct for this level of income. But in this case, we're going to double check. And yes, that $8,095 is correct. Okay, so we're going to put that in there. All right. Now, if we notice, and for those of you that are my obsessive compulsive students and hate seeing all this red stuff start to show up, we still have red. But I don't see any red here. Anything waiting for information. This is where you have to be careful putting in W-2s, because you open up this W-2, you really see all the things you think that you need to do, but sometimes out of sight, out of mind, we have other information down at the bottom. The 414H SUB, that is a New York State thing. All right, I don't have anything on my box 14, so I can go in there, into that, click on that box, hit F3, and it gets the red out. So F3 is your Visine button. It gets the red out, okay? The other thing out of sight, out of mind, and same thing with the W-2 is down at the bottom of the W-2 sometimes hides that state tax withholding. And in this case, we have it down there, so make sure, okay? If all of a sudden they have a big refund and you look at the blue box and they owe a bunch on the state, first thing that should come to mind is, did I do the state withholding on the form? All right, so we got that in there for us, okay? All right, now, I've just completed a W-2. On my, on the bottom of page 313 is another W-2, all right? I can use the method that I did before where I went add form, things like that, but the easiest thing to do is if you look at up here at the top, the next button over says copy W-2, all right? So if I click on that, it gives me another W-2, but it's blank so that I can enter the information. Click on the spouse. We have the information here that this is for Judy. The address is correct. We're going to put in her employer number. Oops, missed a number there. 2234714. Okay. She works at the Garden Restaurant. She made $98.15. Okay. She had federal tax withholding. Okay. Now, as you notice in box 3, the number is not the same, but my box 3 is a calculated entry. All right. So I need to go down to box 7 and I need to enter her Social Security tips. And yes, there is a typo in there. So if anybody notices, box 4 in the W-2 in the workbook has the wrong amount. It should read 609. And then I'm going to put her allocated tips in also. Okay. So I have that, and you can see that it changed box 3 for me to match what's on the W-2 form. Same thing happened here. It's looking at those wages based on the tax return, thinking the withholding's off. I'm going to verify off of my W-2 that it is correct. I'm going to go down here, kind of out of sight, out of mind. Remember that stuff's hiding down here at the bottom of the screen. I'm going to choose my F3, get it out, read out. I'm going to put in my state tax withholding. All right, so I have that in there. Now, I put in Social Security tips and allocated tips. All right, if you go over and you look on your tree on the left, you can see that because I put those numbers on that W-2, it automatically generated my 4137, all right, for Judy. So we're going to take a look at that. Sure enough, just like the exercise we just got done doing, Garden Restaurant, pulled over the tip information, okay? If it were the case that we had anything that was less than $20 a month, that we talked about there, there's a green number, we can put that in there, but otherwise it calculated everything for me, okay? So we have $70 there. So on those tips that are in there in her allocated tips, that's what she owes in Social Security and Medicare, all right? So we're going to go over then. We're going to take a look at this Schedule 4. Remember we said this flows to Schedule 4. We see on line 58, 4137 or $70. We go to our 1040 page 2, come down here under other taxes. Our schedule 4 flows there. So that adjusts our total tax because it's adding that Social Security and Medicare tax that we have to pay. Okay? All right, cleaning up a few things here. We look on this, everything's in there with our 2 W-2s. Again, red exclamation point, maybe we're missing some information. We have to verify that direct deposit information that we put on the main info. So we're going to put that in there. And this is where we get to indicate if it's a checking or savings account. We're going to put on our account number. Okay. We look here. We have due diligence that we have to do. It's talking about the fact that there's a child tax credit. And as our bullet said, none of that was disallowed. So we'll answer no. Also, we have down here this 8867. For you as tax preparers, this is your due diligence form. Very important form that you complete because you need to ask the questions, okay? If you are doing a tax return for a client and you go through these due diligence questions and you're thinking about the discussion or the interaction that you've had with the client, and as the old saying goes, if it quacks like a duck and it walks like a duck, it's probably a duck. So if there's something that doesn't sit right, that this person is trying to do something on the return that you do not agree with, this due diligence is the part that if you sign off on this, you agree with what they put on there. All right. It's asking, did you complete the return based on information for the tax year 2018? We're going to answer yes. Okay. Did you satisfy knowledge requirement by reviewing information to determine if the taxpayer is eligible to claim credits? We're going to say yes. We went through that when we asked our students, or excuse me, our clients, if the child was theirs. You know, once you ask them, hey, is this your child biological and things like that? And they're going to say, yep, I was there when they were born and they're still mine. Okay. Did any information provided by the taxpayer, third party, or reasonably known to you in connection with preparing the return appear to be incorrect, incomplete, or inconsistent? Well, if you feel like they gave you the straight answers, then you can answer no. Okay. But if you feel like, say, may have been a little bit off on something, you know, this is where that question 5, you can list things here. There's a new form that the IRS has put out that we're going to put in everybody's hands when they do returns and they have something that you basically can hand to the person. I believe it's called a 14815, I think is the form number. I can't remember. I just saw it for the first time when we were down in New Jersey. But it's basically a list of things that are documents or sources for you to prove that that child is yours. Birth certificate with mom and dad's name on it. Social Security card, obviously. School records shows mom and dad's address, the child's name, and the address on the return. Note from the doctor. Maybe they receive social services, the document from that. There's a list of documents so that you can verify that that child is actually be claimed on there. Okay? And if you get something, you could put on here school records, okay, that you had them bring in. Or maybe they also provided a birth certificate, okay? So you can put on there what you saw, and you obviously will make copies. They'll show you how to do that in the office, but you'll do that, okay? Did you ask the taxpayer whether he or she could provide information? You can put yes on that, because you're going to say, hey, can you bring this in? I need to have this, all right? And did you ask the taxpayer if any of the credits were disallowed or reduced in the previous year? You know, again, if they qualify for a child tax credit or an earned income credit or something like that, you know, you have to ask them, hey, have you ever had any of these disallowed? Here's the due diligence, in this case for the child tax credit for a lane that's on the return. Have you determined that each qualifying person for the child tax credit, advanced child tax credit, other dependent credit is the taxpayer's dependent, who is a citizen, national resident? Hey, sounds like some of those things from our dependency test. Did you explain to the taxpayer that he may not claim if the taxpayer has not lived with the child for over half the year? Ooh, residency. Did you explain to the taxpayer the rules about claiming those credits for a child of divorced or separated parents? Okay, and that Form 8332, that is the one I talked about earlier. That is a form you would complete where the custodial or residential parent can release the credit to another tax return or to another person. Okay. All right. And at the bottom says you certify that all these answers are truthful to the best of your knowledge. All right, so we've completed the due diligence there. All right. Now, off the main info sheet, if we go to our tree on the left, we're going to go to our New York 201. Okay. All right. On there, we're going to have Erie County. You can see in that main info on 312, we have Erie County. We have the school district that they're in. Okay. And that is 300. We have a question here. Do they have financial accounts in a foreign country? Again, like I said, no, but I had a client send me a picture, texted me a picture of himself standing in front of a Cayman bank and did not want to have to do that 8 years of paperwork. And then this is also, they had no deferred comp on their return. And then again, red exclamation point, looking for information. We go to this. It's asking us, hey, you had your federal refund deposit into account. Do you want the state to go into the same? That's what we're going to do. If they want it sent to them as a check, you can do that. Or some people like to put their federal in a checking account and their state in a savings or vice versa. So if you can do that, you can change that. You don't have to re-enter the routing number and account number if you choose the first box up here. It's a personal account. And again, it's not located outside the United States. And you'll get a number later on that will be assigned to you from New York, and you complete the return. Okay. Now I realize there's a little red left here for the price. Don't worry about that. That's much later that we'll cover that. Okay. All right. Any questions? I know I kind of went through a lot of stuff, but I wanted to spend a little time on that problem. All right. Okay. All right. Okay. So it is time for our first break. All right. So we're going to take, let's see, we'll take 10 minutes. We'll come back at 10:30. We'll come back 10:30. We're going to hit the subject matter in chapters 4 and 5. I'll do another problem. I won't spend as much time explaining a lot of the stuff, but I want to do another problem so you have some good reference there. Okay. So like I said, right now it's 10:20. We'll plan to be back here at 10:30. All right. So warm up the coffee, stretch the legs, bathroom break, whatever it takes. Okay. Welcome back, everybody. I had a couple things come through on the chat down there. One was asking about the PDF. Thank you for the reminder. I made a note to myself here, so I'm going to show you that here in a second. The other question came through about, about what was incorrect on the homework. I have, 26 students that are doing online. Besides the ones you see here, some of them watch it at another time. So I will grade certain things. If I see things that are wrong, I will definitely be in contact with you. As I said at the outset, I want to let everybody know you can self-correct on the homework. As far as in the back of volume 2 is the answer key for the exercises and the quizzes. So that is back there. So you can correct your errors on that. Again, I'll be kind of watching some things that everybody does. But you can correct your answers on those, putting those out. So I just want to make sure everybody there, as I told the story, I felt very bad for a student of mine that did not realize those were there. And with that, as far as the problems, what I will do is I'm going to show you the PDF, but I will start to send out answers, the answers to the workbook problems as far as what the refunds should have been, the AGI, things like that. I know on your syllabus, you probably had something there was with a list of all the names and the problems where you can record those. So as you do those, if you want to summarize them there and keep them there, you can do that. And so you can put those there, but you know, I'll send out the answers. Some of the problems that we do, or I should say that we don't do in class, I'll probably send out some PDFs if people say, hey, I'd really like to see this one. You know, it's tough because when you send out the PDF, it's just the forms printed that would be a result of what you did in tax-wise. So sometimes it doesn't show you things. I'm going to try, like I said, to do as many problems as we can. You know, on the time that we have together online, because that way you can see those things. You know, if we need to, you know, catch some issues, I encourage you, you know, either email me that you'd like to do a one-on-one session with your, you know, through Zoom, that we can kind of go through some problems and, you know, make sure that we get, you know, get you acclimated as soon as possible. During the break, I did send a message to Bob, our IT, so make sure, again, in the chat, if you do not have your TaxWise installed in your thumb drive, you're not able to do that, please put in the chat, let me know TaxWise not working. I'm going to send them a list of contact information for everybody that has that. So if you have not done that, please make sure that you do that, you know, so that I can get that list to him so he can work on that, because that's very important that we do that. Okay. Like I said, the other question we had in there was the fact that we wanted to know about the PDF. So I'm going to go back to that, and what we have here is I'm going to share the screen again. I'm going to go back to my return that we just did for Russell and Judy James. Okay. All right. So okay. A couple little procedural things here. Okay. All right, so we have the return that's that we did for Russell and Judy James. Okay. One thing is, and just because it moves faster for me, but on the return here, if you go down to where it says what if mode, and I click on that, okay. Okay. Hold on one second. I had something come up there and I did not see it. Okay. That what if mode, if I go on there and I click on what if, you'll see it turn green around the outside. So under File, all right, you go down, click what if mode. What I'm able to do with this now is that I can change anything on the return, and then it'll go back to, you know, when I'm done, I can see what something it's going to do. So in this case, I'm going to go over here, and I'm going to say, all right, Russell, we're going to go here, and we're going to say, Russell, box 12, code D, whoops, code D, we're going to put in there a, we're going to have you do some money to a 401k next year. So if everything else held the same, and he put $5,000 into a 401k, okay, what happens to it? All right, well, as you can see here, you know, change things a little bit, you know, it would have meant that his income here went up to $78,550 less the $5,000 taxable, okay? Didn't necessarily affect anything that in our refund or our state refund, but we were able to do that, okay? And then we can tell them how that would impact things, all right? Now, we're going to say, all right, so that means that your pay, your taxable income would have dropped to $68,550, okay? So you can see it was here, but then his taxable would have been much lower. We look at our blue box, we can see our refunds both climbed. So basically what we did is we made less taxable income. So we can kind of say to him, hey, if you think about putting some money, and especially if your employer's matching, you put some money into a 401k, lowers your taxable income, increases your refund, and then it's found money from your employer. It's kind of a win-win-win all the way around, okay? So we tell them that would happen. Well, when I get done, I go up to File, Go down to what if, and I click on it again, and I answer that I do not. I say no, want to change that. And once I do that, my return will kind of blink, the green goes away, and you can see the blue box in the corner. All right, went back, okay? Now, the other thing is printing to a PDF, okay? If we look up here, there's two buttons. It's print return and print form. Make sure that if you're going to send your problems to me for PDF, that you do print return. If you do print form, I will only get the form that is open on your screen, okay? So we got to make sure we do print return. All right. Okay. Can everybody see the dialog box that popped open? If somebody could put in the chat there that if they can see that. Okay, so we have that. All right. Okay. What I want you to do is under select packets, you're going to check file copy. And then on the right, there is a button that says print to PDF. Once you do that, another dialog box will come open and it says file prefix. And all you have to do is type in there, and this one we're just going to call Russell James, okay? And it's going to save to the desktop. Let's see here. I want to do that one. Let's see, to the desktop. All right. So we'll print to my desktop, and there'll be a PDF on my desktop that will say Russell James. Okay, and that's the way you do that. All right. Okay. All right. Okay, so we have that. Okay. And again, you know, make sure everybody's putting in there if they're having trouble with the software. I see everybody's in there. But that's the way you print to the PDF. But like I said, use the button print return. I had a couple people send in problems and they just print form. You think, well, I'm going to print the 1040. When you do that, it just sends me the page that you're on. I got some W-2s, I got some main information pages, whatever it may be. So, but I only got one page. So just make sure that you do that. Okay. All right. Okay. So, because what will happen then? Let's see here. I don't think I have that screen here. Let's see here. I don't have that on there. Okay. So if I go to my desktop, you can see that I have in there Russell James as a PDF. There in the gray bar. Okay. So there is my Russell James return as a PDF, and then I can attach that to my email. Okay. It will always put the social security number that you use for the return after the name. So whatever you put in there for the social for that return, it'll put that there for you. Okay. All right. So we're going to dig into chapter 4 and 5. Okay. Okay. All right. Chapter 4. All right. Okay. Okay, I did have an email. Somebody's, you know, as I was referring to, I guess I'm kind of sometimes used to the paper copies volume 2, but if you go into your, if you just have the thumb drive and you go into where it says Tax Matters Basic Course, and you open that folder, in there will be answers, okay? So inside there, so you'll have it inside that, okay? So yeah, when I refer to volume 2, I'm referring to the answers are usually after the last chapter, but I believe it's listed first on the in the folder that's on the thumb drive that is under the 2019 Tax Matters Basic course. Okay, so it should be listed in there. Okay. All right, so chapter 4. Remember chapter 3, we covered earned income. We are now going into unearned income. Okay, so we're going to cover things, and again, if we're saying unearned income, it's just the opposite of what we had for our earned income. Okay, we're going to cover the different types of unearned income. We're going to talk about interest and dividends. We're going to talk about Schedule Bs as to where those go on there. Okay, so the information, what goes on a Schedule B is which is where we put our interest and dividends. We're going to identify penalties on early withdrawal and where those go. We'll talk a little bit more about that when we get to adjustments to income because of that early withdrawal penalty and how it's handled. We're going to talk about state refunds, whether those are taxable and where to report. We're going to talk about alimony. Big changes came in 2018 for alimony. We're going to do just a real brief basic understanding of what a Schedule K-1 is. We're going to talk about unemployment, recognizing types of miscellaneous income. Big one in this area, you know, with all of our casinos, gambling winnings and losses. And we're going to talk about things that show up basically on a line 21 that have no other home as far as income or unearned income on the tax return and where we put those. Okay. All right. Interest income. Obviously, interest income is that money that you receive for money in the bank, or, you know, sometimes you get interest income from your escrow on your mortgage, or you cash CDs, or you have investments, whatever those may be. And as you can see here, there's the different types. We talked about the banks, credit unions, all those different things. They give you interest. You cashed in U.S. savings bonds, education bonds, T-bills. Perhaps, you know, you get, you know, money back from insurance. You have loans made to others. So if you're somebody that has decided that, you know, I have a house that somebody's been renting and I no longer want to be a landlord, and I really like my tenants and I'm going to sell them the house, that would, you know, and I'm going to be the one that's going to hold the mortgage. So myself as the landlord, I will basically become the mortgage company, hold the mortgage, and sell the house to my tenant on an installment agreement, you know, basically saying, hey, you owe me this amount each month. You know, maybe it's the same as the rent, but, you know, portions of it are going to pay off this loan mortgage that I'm holding for you. Well, that interest that you receive, you know, just as a bank or mortgage company would do, you have to declare that. So that would be a loan to others. Okay. This Form 1099 INT that you see on the screen, that is the, you know, obviously the official IRS form, you know, from the IRS. You really don't see those that often, believe it or not. You know, obviously we had to use something to put in here for instruction for you. So, all right. So we'll have that. And, you know, but the gist of this is the boxes that we see. Okay. We have interest income. We have, you know, number 3 is another one we'll see with interest on savings bonds and treasury obligations. Box 2, you know, maybe we took money out of a CD early and we had a penalty, how to handle that. Some people have tax withheld. So when they cash in, you know, bonds that have a large sum as far as interest income, they might have some things withheld. When we get in box 6 through basically 13, maybe 14 at times, those are things that we'll see more so on brokerage statements. 1099Bs that have a summary page at the front where you have maybe investments that have municipal bonds and different things in them. You know, I'll get an example that we'll put up for that I will send out to everybody that kind of shows you what those things look like, and we'll talk about them more, especially when we get into things with capital gains and stocks that are sold in a tax year. But you know, those boxes there, you like I said, you typically see those much more on a brokerage or an investment account, especially the foreign tax paid. If you have investments and in your investment you see a mutual fund called Lord Abbott. Obviously, when you hear Lord Abbott, you think of England. And if you have a Lord Abbott, a lot of the holdings are in England. And if that mutual fund or brokerage account pays tax in England on those investments, you get a credit because you've equally paid the tax as being part owner of that Lord Abbott account. Okay, so that's where we'll see that. All right. As it shows here, the different areas where things flow as far as those items that come off there. We'll talk a little bit more about that when we do problems because we'll be able to see it a little bit better within the software. Okay. Great little chart here. Okay. Because interest can be handled different. This is a great chart to know if you are one of those individuals that uses the little colored Post-it tab mark things. This is one that you want to mark because this is how to handle different interest, how it's handled on the federal and how it's handled on the state. Like I said, I'll be sending out to everybody the New York State considerations. So you'll have those when it talks about different things that are handled differently on the state versus the federal. And that's why this chart's here, okay? We can see things with savings accounts. Those are taxed both. Bonds, government bonds, T-bills, things like that. They are taxed on the federal, but not on the state. Municipal bonds are a little bit different, okay? They are not taxed on the federal, and they are not taxed on the state, but obviously we have a little asterisk there, okay? And as it says down here at the bottom, okay, we have a little disclaimer, if you will, that means that right here, this box that we have down here in red says municipal bonds. As a general rule in most states, well, when it says that, that means it must be the case that it's not true for all. Bonds issued by a state are exempt from that state's income taxes. Bonds from U.S. territories, Guam, Puerto Rico, and the United States Virgin Islands are tax exempt in all states. Basically, the asterisk there for the municipal bonds, if I live in New York and I have a bond fund and some of my bonds are in, I have bonds that I bought for schools to build new gymnasiums in, we'll say in New York. But I also have bonds that I have for schools that are being built in Pennsylvania. Well, because I am getting interest on those bonds that are from Pennsylvania, those are taxable in New York. New York only allows you to have non-taxable municipal bond interest if it is from the state of New York. So if you have out of state, a lot of those will be noted on the accounts, especially the brokerage accounts. So you just have to make sure on those, okay? All right, okay. And then obviously we see here overpaid state income tax, taxable on the federal, but the state doesn't tax you. New York does not tax you yet on your refund, but perhaps someday. So, all right. Dividends, next one up again. I know that we show you in the book, there's this example of a 1099 DIV. That is what the document's called. Everywhere you see it, that's where it has to be reported, but it does not show up in this form. Most of this time it shows up, and again, it'll just be a box on the front of a year-end summary for a brokerage account. Or if somebody owns AT&T stock and they're getting quarterly dividends, the last dividend check that comes, there'll be a little box in the corner that'll be noted 1099 DIV, and it'll show it'll label the boxes the same number, but it'll be that. You won't see this form necessarily come for everybody. So, you just have to pay close attention. Like I said, it will be noted form 1099 DIV, okay? We have ordinary and qualified dividends off there. Sometimes you'll have to report capital gains. What that is that sometimes even though you did not cash the stock in and sold it for the capital gains, they have you pay tax on the capital gains as you go along. It just helps adjust the basis so that if you do decide to sell it down the road, that you're not on the hook for a huge amount of capital gains. Section 199A, and that letter is QBI. qualified business income. There are, if you have ownership in property that is owns rental or investment income property, that is something that you have there that's reported that a little bit different. That is that 20% of that can be tax-free on the personal return. Okay. All right. We see the Schedule B here. This is the Schedule B. We're going to see it when we do a problem today in the software. You'll do it. It's very difficult to get paper forms anymore. Okay. I have clients of mine that after I'm done, I have one gentleman that is 97 years old, and he owns some stock that I used the example of AT&T earlier. I think he owns a piece of AT&T stock that he might have got from Alexander Graham Bell when they first made the phone. But he takes this sheet and he wants me to print one, takes it home, and then the next year he comes in, he's got them all listed, and as he hands me the statements, he's checking them off on his list because 97 years old, he's used to doing those paper forms, and he just double checking. He realizes he has to electronic file and things like that, but he wants to make sure that this is kind of a summary for all of his stuff and make sure that we get everything in, and he had all the documents, and it allows us to make a comparison from the previous year to see if there was a document that maybe was missing. Same thing with dividends. Very often he has all of his dividends listed there. Okay. This is a good little list, table 1.1, where to report common types of income, investment income. We're going to cover a lot more of this as we go through the different chapters. It's kind of a good thing right now just because it touches on some other investment income. But again, right now we're just kind of focusing on the interest and the dividends. Okay. You got a few exercises here where you're going to put different things in, and it gives you a couple statements as you complete the Schedule B to make sure you understand where they go. Again, we're obviously going to be doing a lot of the problems, and when we do these for clients, we'll be doing them in the software. So, these are the ones that it's just mainly so that you understand, hey, I get this information, where should it go, what form should it go in, and how does that form work? When the computer's doing the calculation for you, sometimes you tend to overlook the details as far as how those results came about. Okay. And then it'll have the information there that you take and carry it over. Okay. State and local income tax refunds. Okay. If you itemized the previous year, okay, so in this case, when I'm doing a 2018 return and they itemized on their 2017 return, then that state refund is taxable. Okay. When we do a few problems, I'll kind of show you the way some things work. This is a tough one to explain or just read about because it's hard to follow. State tax refunds being taxable are almost going by the wayside because of the increase in the standard deduction. A couple used to be $12,000, now they're $24,000 plus. We'll see when we do itemized deductions, there's that $10,000 cap on what they call SALT, state and local taxes. So, the fact that that is really limiting how much tax you can deduct on your return, the tax liability of state refunds is really becoming minimal. But like I said, the gist of it is that if you have a state refund from the previous year and you itemized in that year, the following year you have to declare it as income. Okay. Our wonderful state of New York has decided to save on stamps. They no longer, it used to be you got a little postcard, says here is your refund amount from the previous year. Please place this on your tax return should you have to. You just get that postcard with your state and local refund, this 1099-G that you see there with box 2 information. They don't send it out anymore. You just have to know whether you got to put it on there or not. Obviously for us, if it's a previous client, that information will carry forward. Okay. All right. Okay. I have a little exercise there that will have you calculate, do some things there where you do some exercises on the state and local tax, and have it carry over there for you. Okay. All right, alimony. 2018, tax laws changed, a lot of them, but this one did not change until really 2019. If you had a divorce decree that was executed prior to January 1st, 2020, all right, and everybody's grandfathered in going forward, but if your divorce or separation agreement was executed before January 1st, 2019, all right, then you pay tax on alimony as income. If you paid it, you got to take it as an adjustment to income. So you got to reduce your adjusted gross income by the amount of alimony. So if you received alimony, okay, first thing is, if you received alimony because of that decree prior to January 1st, 2019, then you have to declare it as income. If you paid alimony, okay, prior January 1st, 2019, that person could reduce their income or adjust their income by the amount that they paid, okay? And alimony is alimony. It's not child support. It's not maintenance for the home. Sometimes in New York, they will call it spousal maintenance instead of alimony. That is the same thing as alimony, okay? So that they will have that, all right? Now, after January 1st, 2019, if your divorce was finalized, we'll say today, all right? And there's alimony involved. So I went through a divorce and it's finalized today and I have to pay my spouse alimony. Well, it's no longer taxable for her, but that means it's no longer an adjustment by income. So this is a big one. So there were a lot of times at the end of 2018, counseling clients, if they were going through a separation or divorce, hey, depending on which side of the equation they were on, you need to hurry up and get this done. Because if you or if you want to have it, if you want to take it as an adjustment, it needs to be done before the end of this year, 18. If you don't want to have to declare it as income, you better delay, okay? So obviously some of our clients were making beelines out of here, calling their lawyers saying, let's get this done. And the person that's receiving it's going, oh, we can do it next month. No problem, okay? So, obviously that's the difference. But like I said, there's things here that, as far as alimony, all right, and it does say before 2019, these are the things that, are not alimony on there, okay? Okay. K1s. K1, what I want you to think of a K1 is, it's basically a W-2, just like an earnings statement for somebody that is part of a partnership, an S corporation, an estate, okay, a C corp, an S corp, and a trust, okay? So basically, when you have income, and we won't get into these type of returns, but when you have income from a partnership, an S corp, a trust, or an estate, after that return's done, each one of the people that are involved in it get a K1, get an earnings statement that will come over to their personal return. When we get to Schedule E's later on, where we show rental income, that's where the K1 will go, but we just want to kind of introduce this as unearned income. So your share of, expenses, of profits, again, we talked about the 199A for qualified business income. If you're part of, they call them REITs is the acronym, but again, it's just income property. So with that, but we'll show how those work. Again, I'll send out to everybody, I'm just making a note here, I'll send out a copy of the K1 so everybody can see what it is. All right. But that's really all we have to talk about in exposure on that. Okay. All right. Unemployment income. This is unearned income. When we get to the next chapter and I talk about some of the refundable credits, again, we have to figure out, make sure we know what earned and what unearned income is for the earned income credit. In this case, unemployment is unearned income. I realize it's like a paycheck from a job, but you're just not working, laid off, seasonal, whatever it may be, but it is unearned income, but it is taxable income, all right? With my clients, I realize that unemployment by no means is equal to what your previous salary may have been. You can get up to 26 weeks, I think it is, but you have to realize that that is income, and there is the opportunity to do withholding. All right. I encourage everybody to do withholding. I realize it is limited income. It's not what your salary was before, but you're going to have to pay the piper sometime. And it's much easier to do little bites throughout the year than have to, swallow the whole hamburger at the end of the year when they tax this. Okay. All right, especially if you've unfortunately had to be on it for 26 weeks. So we want to make sure. Now, the one drawback in the state of New York, again, it doesn't look like this, but in the state of New York, you can do your unemployment via online or through a phone call. And for the state of New York, at the end of the year, they do not mail this 1099-G to you. So I have a lot of times, and I have to make notes in the files for clients that may be working seasonal. Maybe they're working summers doing roofing and landscaping, and then they're always laid off in the winter and collecting unemployment. Sometimes that's way at the beginning of the year, and by the time they come see me do taxes, they forgot about it, never sent them a document. Hopefully they have their username and password. We can log in and get the 1099-G online. If they're doing their unemployment benefits via the phone, you can call and request it and have it mailed to you. Takes quite a while. Unfortunately, the local unemployment offices have stopped printing these, so you can't walk in there and go, hey, print me a copy of my 1099-G. So the moral of the story is this is something that you have to ask the client, did you have any unemployment? Because out of sight, out of mind, they might have totally forgot, and hopefully we have a means to get in there and find it and print it, because if they were unemployed way, almost a year ago from when we're doing the return, they'll probably totally forget about it. Okay. All right. We have some other income. Obviously, we don't have much for the Alaska there. We do have some court awards and damages. So if you're involved in a lawsuit, that lawsuit income is taxable if it is lost wages, business damages, emotional distress, and attorney fees. It is not taxable if it's compensatory damages for physical injury or illness. To not plug anybody, but to borrow a term, if you're dialing 444-4444, hurt in a car, those probably are going to be physical injuries. And when they talk about the compensation that you receive, that is non-taxable. Okay. We've talked a little bit on the W-2 about employee awards and bonuses. Boss is going to give you, tomorrow the Bills are playing the Eagles. Let's all cheer for the Bills. It's nice to have a city with both teams playing so well. But the boss says, hey, how'd you like to go to the Bills-Eagles game tomorrow? 4 tickets. I'll give you the private box. I'm going to, give you preferred parking next to the stadium. And in fact, beforehand, you and 3 of your friends could go have dinner on me at Chef's. You've been doing a great job. I just want to show my appreciation. And, most of us will go, yeah, sounds great. But I want you to remember, they're really cracking down on that. This is considered other income. It's kind of a award or bonus, especially when it exceeds $25, which, any part of that would. But you're going to have this show up in box 14 on your W-2 and become part of your taxable income. Okay. And if it's there and it's not part of your box 1, we have to put it on the return. Okay. Hobby income. This is one, a section 168 of the code. They always refer back to this. If you are participating in a business, but you're really not in it for the profit, you have no profit motive. I'm making birdhouses and I'm selling the birdhouses, but I do it just because I like to. I'm not trying to make money. I can't show that as a loss every year to try to reduce my income. It becomes a hobby is what the IRS claims it as. So I have to show the income in one area and I show my expenses on my Schedule A. as opposed to being able to show it on a separate, what they call Schedule C that we'll talk about later, I have to show it as hobby. Illegal activities, okay? We have an individual that is decided to sell medical marijuana in the state of New York without a license. All right, so they're selling medical marijuana, and they have decided, I am going to claim this as income so I can get the earned income credit. Okay, even though that's an illegal activity because you have to have a license to sell medical marijuana, you could still put it on their tax return. Now, I'm sure all of you are sitting there going, who is dumb enough to do that? Well, I don't know. I'm sure that that's why it's listed here. Somewhere along the line, somebody decided to put income on a tax return to try to get a credit of some kind, because then it became, income for them. But, legal activities, you can put those on there. But when we show you where that would go and what you might have to title it as, I'm sure that the IRS would be sharing that information with fellow government agencies, and you might have a knock at the door, okay? Rents from personal property, we talked about some things, but if I am renting a house to my son and I rent it to him for $500 a month, okay? But everybody else in the area, those houses are rented for $1,000. Well, because I'm renting it below the fair market value of the area, I cannot take expenses like I would normally. I have to show that as income for $500 a month, and then if I itemize, I can take my expenses. I can't show it on a Schedule E that we'll talk about later, where I can take the expenses directly against the income. So it works a little bit different, okay? We got three special ones that we're going to talk about in a little bit more detail. First one's cancellation of debt, okay? You will see these little statements that will look like these. Basically, as it talks about there, is if I have a credit card, say from Citibank, and I owe $10,000, and Citibank says, hey, we'll take $7,000. And you say, great, I'll pay it. Well, that $3,000 of debt forgiveness or cancellation of debt is income. So you have to declare that. This one we see a lot of letters from during the summer. Because sometimes it takes a while for these credit card companies or credit collection agencies to get this off their books. But, this is where, it has to be the case that, you have to declare that as income. Now, you can, as there's a little box that's down here, all right, and foreclosures too, talks about different things with codes and things like that. But there's a little box down here, little help box. If an individual has a cancellation of debt for credit card or due to foreclosure, we can do a Form 982 and basically try to reduce that tax obligation, discharge it, if we will. On that form, you can just show that a person is insolvent. Doesn't necessarily mean they went through bankruptcy under Chapter 11 or 13 or whatever it may be, but that they're insolvent. We have a worksheet that we do, we keep on file, and it basically says, hey, they own more than they owe prior to the cancellation of debt. So what that means is, if that $10,000 credit card debt, that will be what we owe versus what we own. And when we own things, they're looking at appraised value of your house, Blue Book value of your car. Do you have a 401k, checking, savings, stocks, whatever it may be, anything that you own in your name versus what you own versus what you owe. Now, if I have somebody that has cancellation of debt, and my first question usually out of my mouth is, do you have student loans? Because that's a huge debt in our country, okay? If they say yes, there's a good chance I can discharge that tax on that cancellation of debt, okay? Gambling winnings, all right? Gambling winnings must be reported. As it says, gambling winnings are fully taxable and must be reported on the tax return. I know there's this nasty rumor that circulates, everybody sitting at the penny slot saying, oh, don't worry, you had more losses than winnings, you don't have to report it. That is not true, okay? If you have winnings, you report them as gambling winnings. You can take losses up to and equal to your winnings on your Schedule A if you itemize. So again, back to standard deduction, $12,000. Somebody, their only source of income is $10,000 in gambling winnings, and they say, well, I had, 15,000 in losses. Well, I'm sorry, but we can only take 10. Well, 10,000 of income shows up as taxable income. I can put the $10,000 of losses on their Schedule A for itemized, but I'm not really going to get to use it because I'm taking the standard deduction. As it says in the help box, do not, and again, this is something that the tax courts have not upheld, is these net win-loss statements that you can get from the casinos. Somebody will come in and say, hey, you know what, here, look, I lost $30,000 this year. Well, that's great, but I still have to report your winnings separately from your losses. So they need to be keeping records. You need an itemized list showing each winning and each loss. If you have somebody that's a regular gambler or scratch off tickets and they want to write off the losers, they got to show those scratch off tickets not only that they have the ticket, but when they purchased it. Okay? You hear about stories of people having shoe boxes full of losing scratch off tickets for that rainy day big winner. Well, did they come in with those? I'm going to say to them, you need to prove to me that each one of those was bought in the tax year of the winning. I can't just assume. Okay? All right. So really the moral of the story, and we'll see how this goes in when we do a problem today. But, the moral of the story is you have to report gambling winnings, and you only can take losses up to and equal to the winnings, and they're reported differently. Now, one thing I will say about gambling winnings, all right, 2019 right now. Earlier this year, I was helping somebody, counseling them on some things. I think I told you that I do Medicare also. So this individual, back in 2017, her husband had passed. She got some money. She decided to go to the casino with it. Her only other source of income was $25,000 in Social Security. She won $250,000 that year at the casino, 2017. All right, but she had $262,000 in losses. Well, on her tax return, she was able to itemize, so it really didn't impact her. Move ahead to 2019. Remind you that she won $250,000. In 2019, that $250,000 counted towards the cost of her Medicare Part B. Instead of $135, her Medicare went to $486. Her Part D went to $90. Okay? Her enhanced star went away, so she had school tax. 2019, she didn't have gambling winnings. She only had her Social Security. So all of a sudden, her costs for things from her 2017 tax return caused things in 19's cost to go through the roof, 2 years removed. We were able to appeal some things because of her limited income. I had to look at her and say, thank goodness you were in the hospital for half the year, that you couldn't go to the casino because we could prove this. But, basically what I was saying is that, you got to warn people. These gambling winnings can come back and haunt them 2 years in the future, especially if they're of 65 or older. Okay? All right. Talked about the losses and what we do with those and where those go. Okay? We got a couple exercises there that will put those things in there. All right? Miscellaneous income. We have 1099 miscellaneous income. All right? We'll see these. You do see this document quite often. We make a lot of them up here for our clients because of various reasons, whether they're self-employment or they have somebody that works for them that is self-employed or whatever it may be. But, box one, we have the rents. If somebody has a house that's in the city where it's rent subsidized, we'll see those. Royalties, box two, somebody wrote a book and they're getting royalties. Other income is truly other income. Most often we'll see in that box two things. Since all the volunteer firemen, we will see a lot of lifetime service awards for retired volunteer firemen. Or in that one, now we start to see a lot more for people that take the Family Leave Act and are paid through that Family Leave Act. They have to declare that as other income. Tax can be withheld depending on how they do that. Box 7, non-employee compensation. Now, this is handled different, as it says there when we get into Schedule C in Chapter 14, we'll talk about non-employee compensation. So that'll be handled a little bit differently, okay? All right. Okay, and we have those to talk about the box. Now, the nice thing for 2020, we did find out at the seminar we just went to, the 1099 miscellaneous, what they're going to do because of the confusion between box 3 and box 7 all the time, is they have decided to change the 1099 miscellaneous and then create a separate 1099 that's non-employee compensation. They're going to call them NEC. 1099 NEC, that they'll just have that. So that'll keep that confusion, hopefully, okay? As it says for this one, these are instances of income that are not taxable miscellaneous, inheritances, foster care, child support, you know, thank goodness they don't charge or tax our federal income tax. Gifts, you know, this is where, you know, grandma gave us $10,000, you know, and we don't have to declare that. Insurance, life insurance, medical insurance proceeds, meet rebates. Obviously, all veterans, their benefits and pay, and workers' comp. These are not taxable. Remember, we talked about disability in the last chapter. That is taxable, depending on, and how much it is depending on who paid for the policy. Okay. All right. So that gets us through chapter 4. Okay. All right. A lot of stuff I'm throwing at you. We're going to take a quick 5 minutes. We'll be back at 11:30, and we'll take a quick 5 minutes here. We're going to go through real quick chapter 5, and then we'll do one more problem. So we'll see everybody back here at 11:30. Okay. So we're going to continue on here. Like I said, we're going to get into chapter 5. We're going to try to go through the main points of chapter 5. And then I have one problem I would like to do with everybody from chapter 4. As I said, what we just covered with unearned income. So we'll go through that. Okay. All right. I apologize if my voice is cracking a little bit. I'm just getting over a cold. I'm glad to get it out of the way, but just kind of that time of year as the weather changes, the fun of Western New York. Okay, so we are going to get into chapter 5, and we're going to start to talk. We're getting away from income per se, and we're going to be getting into credits. All right. Income, obviously has a part on the return. Those are things, whether it be earned or unearned income. Credits, what those are the things that help us with our tax bill. Okay. Now, we are going to be talking about refundable credits. Okay. And the best analogy I've ever heard, and this is what I'm going to share this with, and this is the way I want you to remember it. All right. Refundable credits, those are the credits that are just like the Energizer Bunny. All right. Once they've eaten the tax bill, they keep going on and on and on. So even though the credit may wipe out our tax bill, we still have a refundable portion. It becomes part of our refund that we get. So these are like the Energizer Bunny. They can just keep going on and on and on and on. Next week, we'll talk about non-refundable credits. I want you to think about those as a Pac-Man. Now, I may be dating myself if I'm referring to Pac-Man, okay? But the Pac-Man, the non-refundable credits, just like the little Pac-Man, eats up the tax bill. Once all the little dots are gone, the Pac-Man stops. Okay, so again, I apologize that it seems elementary or simplistic, but it is the greatest way to remember it that I found. So right now we're talking about Energizer Bunny credits. These are credits that are tax liability or our tax bill. They will wipe out our tax bill, but even after that, we still get money from them. So there are Energizer Bunnies. So we're going to talk about the difference between a deduction and a credit. Like I said, we're going to talk about refundable and non-refundable that I talked about. We're going to listen to the earned income credit, and I stress earned income. That's why I stressed about the whole unemployment. We have some people that come in, file a return with unemployment, and they can't figure out why, with them being single, head of household, and they have all this income from unemployment, they don't get more earned income credit. It's because unemployment is not earned income. The additional child tax credit, the American Opportunity Credit, that college credit, premium tax credit, we'll get to that again more in chapter 16, I guess it is. I think I referred to it as 18 earlier, but 16. That's for the one for your money you might get from the federal government or the state to help pay for your health insurance premiums if you go through the marketplace. Excess Social Security, credit for tax on undistributed capital gains. That's about all I'm going to say about it, okay? All right. Deduction versus a credit, okay? Tax deduction, like our standard deduction, itemized deduction, or adjustment to income, those are things that impact our income. Credits affect our tax due, okay? So we're going to go through some examples here to kind of to really understand which is which and how it helps us, okay? Talks about John and Jackie, 2 unmarried, each filing single. Jackie earns more than John, so you can see the tax here. So we got John making $10,000, okay? Taxable income, taxed at 10%, tax paid. We have Jackie, okay, making $100,000, no deductions, taxable income, tax due. You can see how that works across there, okay? Now, if we give them each a $50 tax deduction, okay, so that means that we take $50 off John's tax, changes taxable income. We take $500 off of Jackie, he changes it. We can see how it affects their tax due based on their rate. That's their tax paid. So there's their savings. Okay. All right. So we can see how a deduction would affect, would create the savings. Okay. So basically what it's saying is a deduction saves only a percentage of, those tax dollars. All right. Now, we're going to start with the same scenario, but we're going to handle this a little bit different. We're going to look at a credit. So we got our same scenario there we talked about with tax due, tax paid, the effective rate. We can see on this one, as opposed to having a tax deduction, all right, we get a credit. Okay. Well, since we have a credit, it's basically the same value to both of them. So if they're both eligible for that credit, it has the same value to them. Okay. So generally a credit saves 100% dollar for dollar. Okay. So when we do things that are adjustments to income, or they add to or itemized deductions, or they create a deduction, it's a proportional, it's a percentage. It's only affecting or saving us money in a proportional or a percentage manner. When we can find somebody a credit that they're eligible for, that's a dollar for dollar reducing what they will pay in tax. Okay, so you can see how important credits can be on a tax return. Okay, all right. Non-refundable tax credit versus refundable. Remember I said, non-refundable, Pac-Man. All right, it's going to eat, and once it's done eating the tax bill, it stops. If there's extra, it's lost. Okay, refundable credits, Energizer Bunny gets to the end of the tax bill and keeps going. It is refunded to the taxpayer. Okay, so we're going to our example here. We have John and Jackie. We talk about the tax due and the tax paid. Okay. In this case, there's a $1,000 non-refundable credit for each of them. All right. So we can see here that John then would pay no tax. But of that $1,000, he only got $800 to use. Whereas because Jackie had a higher tax bill, she gets the full $1,000. All right. So that is a non-refundable. The $1,000 credit ate the $800 tax bill. All right. Pac-Man. And that wiped out the tax bill. So once it got done with the tax due, it stopped. In Jackie's case, that non-refundable credit ate up $1,000 of the tax, left the rest. Okay. All right. In a refundable credit situation, all right, we have John here, tax due of $800, and again, refundable credit, Energizer Bunny, $1,000, wipes out his tax. The excess, the $200, he still gets as a refund. Okay. In Jackie's case, higher income, she gets that refundable credit, but because it did not eat all of her tax bill, she just reduces her tax paid, and none of it shows up in her refund. Okay. So again, deductions versus credits, non-refundable versus refundable. Okay. All right. Earned income credit. This is a very big credit on tax returns. And I know we went through real briefly the 8867 when we did the tax return, and we talked about the due diligence. There's a part on there for earned income credit. The earned income credit also is the biggest area for fraud. Okay. People know the sweet spot, if you will, for the earned income credit. It's available for certain people, as it says, who work and have less than $54,884 of earned income for married filing joint. Okay. That means they get money back. This is, refundable credits are definitely found money, okay, on the return. And in order to do this, to be able for the earned income credit, there's a little chart here, kind of talks about it in a nutshell. Talks about your gross income. Talks about the fact that you must have a social security number. You must be not filing, married filing separate. Remember when I talked about different filing statuses back in the early chapter? We talked about married filing separate is something can hurt you. As it says here, your filing status cannot be married filing separate. If you have somebody that wants to do married filing separate, and again, I always refer back to student loans, they do that, earned income credit off the table, okay? Must be a U.S. citizen or resident alien all year. You cannot have any 2555, which is foreign earned income. Investment income must be 3,500 or less. This is an important one because a lot of times I have people that don't realize, they get done with their return and says, well, wait a second, I only made $18,000 and I have 2 kids. How come I didn't get the earned income credit? And I said, well, unfortunately, you live in a duplex, all right? That is income, and that is investment income. We talked about that a little bit. And if they made the $5,000 profit on their duplex, that is investment income that is over the $3,500. They are no longer eligible for the earned income credit, okay? And obviously, you must have earned income. Cannot stress that enough. I mentioned it earlier. Unemployment is not earned income. Gambling winnings are not earned income, okay? The second thing you must meet is your child must meet the relationship, age, residency, and joint return tests. So basically, it has to be a qualifying child, okay? All right. If you don't have a qualifying child, you must be at least 25, but under 65. You can't be a dependent of another person. You can't be a qualifying child, so you can't be on 2 returns to get this. And you must have lived in the United States for more than half the year, okay? And then again, income must meet it. So if grandma and grandpa have the return and have a child on there, and their income would qualify for earned income, but they're both over 65, they are not eligible for the earned income credit, okay? There's a lot of details in here. Again, you can read them. Make sure you understand all the parameters, all the restrictions, all the different things on the forms. There's a lot of questions, okay? When I get to this EIC schedule and the EIC worksheet and the software, I make sure as part of my due diligence, besides the 8867, that I go through all of these. I am asking them, was the child under the age of 24, and a student, then they may be eligible. Or were they totally and permanently disabled? We have instances with that. Their relationship, how many months they lived with you, okay? These are all things, like I said, that we have to ask because, again, earned income credit, if a return has an earned income credit or an additional child tax credit, they won't start releasing the refunds on these returns until late February because they want to make sure this is a way that they feel that they can curb fraud because they're comparing returns because maybe somebody's qualifying a couple people or different things. It's a way for them to really make sure that those people claiming children and the status for the earned income credit that it's a valid claim. So they wait a little later in the tax season, not much, but it can be 30 days, 45 days before they start issuing the refunds for any returns that have earned income credit on them. Okay. Again, I'll let you read through this, all these eligibility checklists. You'll see when you're doing returns that form 8867. We're going to cover a chapter later on that talks a lot about the ethics and things like that. It talks about due diligence requirements here from the 8867. If somebody's fraudulently claiming a earned income credit and you help them do that, obviously your credentials are on the line. Esther's, there's penalties, $5,000. That individual too, for that child that lives with them, could be the case that they lose it for up to 10 years. That's a lot of time to lose some money that maybe would help that household where that child lives. So again, make sure you understand the repercussions, okay? And make sure you understand that the EIC, again, is a fraudulent. You can see there on page 514, it talks about the 8867, making sure that you go through that. I talked about it earlier when we're talking about that and we were doing a return. If you're asking those questions or you've had dialogue with the client while they're preparing the return, if it quacks like a duck and it walks like a duck, it's probably a duck. If they're seeming like they're struggling to give you information about somebody they're claiming, you really have to ask them. So, okay. All right. Okay. Okay. All right. Okay. Oh, and there's the 8867. I forgot that we put that in there with the due diligence. So again, the importance of going through all that. Okay. Talked earlier when I was kind of going through things and we typed it in the problem that we were working on. Here's some things to verify that qualifying child. School records, lease statement. If they have where they're renting, and on the lease, a lot of times the landlord says who's living here. So if it has the address, has mom and or dad's name on it, and then the kids, healthcare provider, the doctor, medical records, health insurance. Again, you have to make sure that it shows the year that they're claiming the child to. It can't just be something that just shows all that information. Places of worship, social service, a statement from the employer. It says, yes, my understanding is that John Smith has 2 kids. They live with him. They're on his health insurance, something like that. Okay. So it has all of that. All right. Bunch of examples here again. It looks like there's a lot of stuff about EIC. We just have to make sure that everybody understands the importance of this. Okay. All right. Okay. All right. Again, some bunch of exercises. So there's a lot of handwriting stuff. But again, when we see these things where we see the steps like you see on the screen here, and we're going through these are things for you when you're doing it this way and you're reading this information. I realize it's dry and you're thinking, who is this going to apply to? But for you as a tax preparer doing a return for a client, it's very important that you understand this because these are great things for you as far as your interview skills to get the correct information from them. Okay. All right. On page, let's see here, 528, we have the additional child tax credit. Sometimes some of the stuff gets a little bit out of order, trying to get it in which way we want to do it. Chapter 5 and 6 are very similar, but right now on chapter 5, we're talking about the refundable tax credit. So we're talking about ones that we have that, basically what we're saying with this is that somebody, and for 2018, the child tax credit went to $2,000, $1,500 that can be refundable. So, if that $2,000 credit for the child on the return, which used to be $1,000, eats up the tax bill, obviously there's some money on the table, and then when we talked about the fact that we have separated parents and, somebody's releasing a child to somebody that is the non-custodial parent, when we release them, we could be releasing $2,000 to them, $1,500 refundable. So this is where it becomes very important on that, okay? So that's where we do this form, the additional child tax credit on there. The refundable portion would be on a schedule 8812. You're gonna go through the calculations here to show. You'll do some exercise. Again, you can see how that works to make it a refundable portion. I apologize that it seems a little redundant. It's nice that the software does it for you, but the gist of these exercises is so that you understand the importance of how those numbers come, and if they're not eligible for it, why they would lose it. Because if a child tax credit does not show up on a tax return, you got to explain why. It used to be the case that anybody over roughly $100,000 married filing joint, that used to be somebody that would have what's called a phase out. That means that they would start to lose the child tax credit. Okay. In 2018, it's a dramatically different thing. The child tax credit for married filing joint phases out at $400,000. So this is a dramatic difference. Okay. So that means that higher income people, and if it's a case that releasing that credit to maybe one or the other that makes more money now, as opposed to the phase out before. It's a lot of money that's on the table, even for an additional child tax credit. Okay. American Opportunity Credit. This is an education credit. 40% of it can be refundable. It is basically a credit that is, we don't cover a lot of it. We'll talk about it more in Chapter 6. But it's the credit that in the first 4 years of college, it used to be the HOPE credit, but it is a $2,500 credit. And again, this is the credit when I talked about that line on the tax return that talks about can you be a dependent on somebody else's, and if they don't check that box, then that person doesn't show up on mom and dad's return as a college student. We got $2,500 or more in stake on the tax return. If they're over 17, we got the other dependent credit, $500 on the table, and then we got another $400 on the state return. So we could have $3,500 in jeopardy by that box not being done correctly. And we have a refundable credit. We got an Energizer Bunny credit that could be really helping us out going down the road. Okay. Credit for excess Social Security tax and things. We talked about that a little bit. You see those numbers there for the different things. Again, most employers know to stop at $128,400 at that 6.2% rate. And the maximum that should show up on a W-2 is $79.60.80. Okay. Sometimes payroll, maybe a company changed ownership. There's going to be things that happen. If it's the case that you see on a tax return that money is over $79.60, you need to inform your client that they need to go to their employer and get that money back. They should not have had to pay that. Shouldn't have been taken out of their paycheck. If it's the case that there's 2 or more employees, again, I usually use the example, doctor works and makes $100,000 at one hospital, $100,000 another hospital. You put that together on the return, $200,000, but each one of those was withheld at $100,000 on a W-2, it might result in excess Social Security withholding. So you might have to do that. If that's the case, then it's done on the tax return and they'll see a refund on that on the tax return. Okay. There'll be some exercises there that you'll go through to be able to do that and get that back. Okay. All right. Okay. We have talking about the undistributed capital gains. Okay. Again, very, very, very rarely will you see anything with this. It is super rare, but you have the information there. It is in there. It is a credit that shows up, on a rare occasion. Okay. Health coverage tax credit. Okay. This is not the premium tax credit. Okay. A lot of people that, if you're an individual that's going through the marketplace, in our case, the New York State of Health marketplace, or any other one, and you're getting a subsidy or credit, an advanced premium tax credit to help you pay for the health insurance premium. So if your premium is $500 and the government is giving you $250, this is not that credit. Okay. All right. All right. This credit is for somebody that, as it says here, has what's called a health coverage tax credit. Okay. All right. What I see this most often is that, with people that lost health insurance or, when they were doing things up in Lockhart with Delphi and GM and things like that, they got some money or they were displaced workers. We see this a lot of times with people that are workers that their health benefits change. So, okay. So we have on that. All right. Okay. All right. So that is Chapter 5. I know there's a lot of material in there. There's a lot about EIC that I'll allow you to read. It's just mainly for point of fact, again, for interviewing skills to make sure you understand with all that. Okay. All right. So here's what we're going to do. Okay. I am going to set up to do. Okay. Let me get back into my tax-wise here. And if you want to grab your workbook, we're going to go to page 47. 47 as class problem 4-1 for John Sampson. But if you want to do that, go to your workbook. Again, that's on 4-7. So. All right. Whoop. Hold on just a second. All right. I get my software back open here, so give me 1 second. All right, come on. Okay, there we go. A little delay, a little sluggish coming open here, so give me 1 second. Okay. All right, so we're going to go through a problem real quick here. Okay. All right. And all right, so like I said, we're on page 4-7 in your workbook. Okay. And we're going to do a problem here. This is for John Sampson. First thing that I'm just going to kind of go through is on 4-7, there's some bullet points. John did an EZ last year. He gets a refund. He wanted to go into his checking account. If he owes, he'd like to have it withdrawn from his checking account. Use the information from the forms in the information sheet. Again, we talk about that, not a full-time student and retirement plan, no distributions. We talked about that is that 8880. The other thing is no EIC was disallowed, had health insurance the entire year. And the thing that we want to make sure we note is John has brought $52 worth of losing lottery tickets. Again, we talk about the fact that that has to be from the tax year. So it must be the case that he's going to have some winnings. Okay, so we're going to get that Social Security number in there. Again, I'm adjusting it a little bit because otherwise, from when I've done it before, it would already be in there. Okay. Okay. All right. Okay, so we have our friend John J. Sampson. Oops, let that space in there. One thing I will note, see I had a space there by accident. If that space was in there and you tried to create the electronic file, it probably wouldn't create. So always be very careful on your typing. We have 76 French Road, and that is in Lancaster. Again, talked about earlier, Lancaster zip code, it shows up at Buffalo. A lot of times the little villages, they won't put that down. They'll just put it down generally as Buffalo. We're getting our phone numbers in there. Okay, and we have a cell phone number for him. All right. Again, birth date's very important because if we get to that position where maybe he's taking money out of a retirement account, we have to have it accurate for the 59 and a half. And he is working as a cook. Okay. All right. Okay, he files single by himself. No children. He lived in New York all year long. He's going to e-file the return. As it says there, if he has a refund, he would like it deposited into his bank account. In this case, it's a checking account. If he owes money, he wants it taken out of there also. Okay. All right. He has. Okay. All right. And we got all the information that is in there. Okay. And again, I went through this a little more in detail on the previous problem, but on this one, just want to get it in there for us. Okay. All right. So we got information in there. I'm going to go ahead and go down to the state of New York. Talks about the fact that he is in Erie County. Oops. All right. Okay. All right. And that is the Maryvale district. If somebody has property taxes, the district number will be on their school tax bill. I'll send out a list for, basically the Erie, Niagara, Orleans, counties, areas and stuff like that. So I'll send out a list for you to have all those codes on there so you don't have to look them up. Okay. All right. Let me just add that to my list here for stuff to be sending out. Okay. All right. So he is not hiding money in the Cayman Islands or Switzerland, and he is not on any type of the deferred comp. As far as health insurance, it's stated there that he had health insurance all year long, and that must have been through his employer, I guess. All right. So first document that we're going to take care of for him. He's a cook. He has a W-2. He's working at Yum Yum Taco. All right. So, some of us that might just think about and put something in our mind that says, hey, I guess I know what I'm doing for lunch today. I'm thinking tacos. Okay. So I have that in there for Yum Yum Tacos where he is a cook. He made $28,241.33. He had $22.01 in withholding. Again, out of sight, out of mind. Make sure we go down to the bottom. We have nothing in box 12 or 14, no retirement plans. To get rid of the red there, go into the box, hit F3. Okay. I did see on there, just saw in the chat, somebody had about the keyboard shortcuts. I'll try to send those out again. Okay. They are handy. All right. Some of them that we'll do later on, they'll be very handy. Okay. And at the bottom there, he had state withholding of $1,054.21. Okay. All right. So we have that. Okay. Now, at the bottom of 4.9 in your workbook, we have a 1099 INT. Now, as I told you, that is not something we will typically see that way. A lot of times, on a statement from the bank, last month's statement will have a year-end summary, might have the information, different things. We don't typically really see this form in this nature or this layout. okay? But in this case, we have some interest income. We learned from our chapter of unearned income that we have put that on the Schedule B, okay? So I'm going to go to my 1040 page 2. Navigation-wise, I like to start, and as you're learning, to go to my 1040, where does it have to end up there, and then work from there, okay? Because everything will flow to the 1040. That is our end-all summary of what happens on the tax return. I realize we now, because of the way that forms are set up with the new tax law, we have these schedules, but we have to understand it's always going to end up in some way all the way to the 1040. So that's where I like you to start. In this case, I have some interest, all right? So I'm going to go here on my line 2B. I have a green number, but I'm going to go in there, light the box up. I'm going to hit F9, and I have a little dialog box pop up. In that dialog box, I see my Schedule B. So I'm going to highlight that. I'm going to open that up. Oops, hold on one second here. All right. Yeah, for some reason my chats aren't popping up, so I apologize that I left the screen there. Yeah, cents do go in there. The computer will round it for you, okay? I enter them and allow it to round it. It doesn't really come up in the calculations, okay? So I'm on my Schedule B. Now, I am going to make a statement, and you're probably going to say, wait a second, can you repeat that, okay? Interest and dividends go on the Schedule B, all right? That is where we put them. However, for the sake of your sanity, interest and dividends do not go on the Schedule B, okay? We use a worksheet. So I do not want you to type, even though we see green numbers, I do not want you to type directly on the Schedule B. It's going to make your life a living nightmare if you do, okay? All right, you're going to have a return. It'll be difficult to pass diagnostics and such. So here's what I want you to do. If we have interest, which this is an interest statement, I'm going to go down where it says interest, highlight that box, hit F9, and I have this little interest statement or worksheet, okay? I'm going to open that guy up. This is where we will type the information. This is much better because I'll show you why when we put the statement in, because it helps things flow to where they need to go. If I type directly on the Schedule B and I do not follow through with everything else, I could miss something on the return. At least working on the statement, things will flow to where they need to go, okay? So in this case, we have a 1099-B that is from First National Bank. All right. Our next column there says box 1 or 3. In this case, it's box 3, shows $541. All right. The next column, TSJ, taxpayer, spouse, joint. Okay. Sometimes on a married filing joint return, if I have a sense that it's important for them to know down to the penny whose is whose, and that's some people. Or if there's a case that I feel like there might be a separation or divorce on the horizon, I do the same thing. All right. It just helps that if I have to counsel them on that married filing joint versus married filing separate, other than using my worksheet, it helps me really know who goes with what. Okay. Just like we do on the W-2 where we hit taxpayer and spouse, we can do that on this one. Okay. But in this case, obviously, we just have the taxpayer. We can put a T in there if we'd like. Now, this is in box 3. So we have interest on U.S. savings bonds and treasury obligations, $541. What do we know from that chart that I made you say that, you got your little orange thing and you're going to mark it? On that, it said anything that is government bonds is taxable on the federal. You see the 541 in the box 1 or 3 is tax-free on the state. So our state adjustment, we're going to put a minus in that plus or minus. and we're going to put 541. Okay. These other columns that are there, and the case of a plus, we'll talk about those later when we get to capital gains, because we'll do some exercises with that. But for this instance, because we had interest income on U.S. savings bonds, okay, you know, I sometimes will even do this, First National, and so that I can remember as to why I made the adjustment, I might put here instead of bank, I might put bonds. It just is kind of a notation in the field there that says, hey, that's why I adjusted it, okay? All right. All right, so we have that. Okay, so we have that. Now, this is where I was talking about things flowing. So we did this on this little statement. This does not print on the final tax return. It is really not part of the electronic file that goes in. But if we look on the left on our tree, we go to our Schedule B, there it is. So we got it to the Schedule B, but we didn't type directly on it, okay? So that's an important part. So again, interest and dividends go on the Schedule B, but do not type on the Schedule B, all right? Same thing happens here for dividends. If I go down to Part 2 for dividends, I go in there, hit the F9, I have a little dividend statement. Same thing, I got a great little worksheet, follows right along with the lines on that 1099 DIV, and I can put that information right in there, okay? Now, we know that on the state return that interest on the U.S. bonds is not taxable. So if we go to our New York 201 page 2, we can see from the federal taxable interest and income on line 2, 541. Well, how do I get it out of there? It's yellow. Well, because of what we did on that statement, if I come down here to my New York subtractions, I go to line 28, I can see interest income on U.S. government bonds, 541. So that way it's subtracting it out. Again, calculated entry, but just because of what I did, I simplified my life. Now, you have to know, and that's why we're doing these exercises that we're doing in longhand out of the textbook, but you have to know that, hey, this goes to there on my Schedule B, it's a bond, so I better make sure that it subtracted it on the state side, okay? All right. Now, excuse me. We have our next one. On page 410, we got some gambling winnings, okay? Now, again, I'm gonna go back to my 1040 page 2, all right? You know, I'm looking around and things like that. I don't really, but then I see down here, additional income, all right? I kind of got a catch-all. So I'm gonna go in there, light that up, because I know it has to come here. I hit F9, there's my Schedule 1, additional income. So I can open that up. Now, I'm on my Schedule 1, and if we remember from our reading, when we talked about in Chapter 4, there's that line 21, other income. So I look at these, and these are things we'll talk about later. Here's those taxable refunds. So if we itemize last year, we'll answer yes, put in that state refund. All right, we got some business income, capital gains, again, things we'll talk about later. Obviously, there must be some other things going to be happening in the tax law. They're reserving a couple lines. We got rental, S-Corps partnerships, there's our K-1s. Farms, unemployment we talked about, that's where that would go. You know, so some of these other sources of income. We talked a little bit about adjustments when we talked about the penalty on early withdrawals, okay? So that's where that would flow to. But in this case, I have some other income. So I'm going to go in there to my other income. I'm going to hit F9. It's going to open it up. I have a nice little worksheet. And as we can see on that first line, gambling winnings from my W-2G, okay? Now, 1099 miscellaneous that we talked about, it says boxes 3, 7, and 8, but be careful with 7, non-employee compensation that could end up on a Schedule C. We got some foreign earned income, some other things that are here. Then we got a section down here where it has line 18. This is where you would see 1099-C. Cancellation of debt, Citibank, put in the amount, okay? We'll go through some of those when we have a cancellation of debt, and I'll show you how to do the 982 as an example of a problem. But those are where those would go, okay? But for now, we're going back up to line 1 because we have a W-2G here from the lottery for our friend John Sampson. Light up the box, F9 in there. There's my W-2G, okay? So I click on that. Again, it's for the taxpayer. My address matches, so I check off that the address is correct. I have the ID number for your lottery. We put that in. Okay. They had winnings, or I should say John had winnings, $421.11 that he won. I guess he was out celebrating New Year's Eve and won this. Okay. Had no tax withheld, but what type? It was a lottery. Okay. All right. Maybe that's the way he celebrated New Year's Eve. He would buy a lottery ticket every year, New Year's Eve. Okay. Down here, state winnings. We'll enter that amount in there. Okay. Now, if you remember from page 4.7, there was a bullet point that said John has brought $52 worth of losing. Well, remember, we can take losing up to and equal to our winning. So if I scroll to the bottom of this W-2G, gambling losses to be transferred to Schedule A. That's where they go. In this case, we had $52 that he brought in, okay? The one thing I will warn you, whoops, sorry. The one thing that I will warn you is that the software does not limit what you put in there. So if I put $500 in there, I've put an incorrect number because I put a number greater than the winnings. In this case, his losses were less than the winnings, but I could only, if he had $500 in losses, I could only put 421 on that statement, okay? So make sure you understand, you can't write off losses greater than winnings. All right? Now, the fact that I put that in there, let's kind of see where it went. So we go back to our 1040. Let's flow back here. Our Schedule 1, gambling winnings, 421. Okay? Said the other part was going to go to the Schedule A. So if I click on the Schedule A on my tree, and I go all the way to the bottom, there's my gambling losses, $52. Okay? So everything flowed right to where I needed it to go. All right? Okay. And that kind of gets us through that one. So that's another problem for you to have that we'll have on record here for the recording. Okay. Again, if you get done, all right, and we want to print the return, and we want to print to PDF, we hit print return, not form. It should check file copy. And then over here on the right, you can just hit print to PDF. All right. It's going to have a file pretext. In this case, it is Sampson. I can put, you know, I can put his first name. I think we don't repeat any names, but you can put John if you want, or John Sampson. And again, the little file folder that's here, you can click on that and pick desktop so that you can find it. Once you know, so you know where it sends it as a PDF, you hit OK. It'll print it up. All right, little bar, and then it'll stop. And that means that on my desktop now, there's a PDF for that return that if I assign it to you, you can attach to an email and send to me. And that'll have the file copy will have everything I need on there. Okay. All right. Sometimes because of the nature of a return, I might, instead of having you send me just the file copy, I might just have you send me the federal and the state printed returns, but I'll let you know on that. Okay. All right. So that pretty much wraps up our time together today. You know, as far as the homework, like I said, make sure that you have typed in the chat if you're having trouble with your thumb drive, so I can get a list of that to Bob. All right. You know, so that we can try to get that figured out because we got to be able to, you know, really get you doing these problems and practicing. Okay. But, you know, I'll assign some more problems. Next class, we're going to talk about, you know, we'll be doing chapters, let's see, 5, 6, 4, 5, 6, 7. We'll be doing a little bit more that has to do with some of the non-refundable credits. They actually break them down into 2 because there's a lot of them that take place there. But there's, you know, the main ones we'll go through, and we'll spend a lot more time on problems. Some of the stuff that I assign you this week, again, we'll do some of the problems at the beginning of class. We'll do some of the new material we covered and do a problem at the end of the class. Next week, too, I'll take, for lack of a better term, I guess I'll take the muzzles and the mutes off because I want to start interacting a little bit with everybody so that you can say, hey, I didn't see this, or can you tell me how to do this, and, you know, let you do that. So, you know, right now we're trying to get everybody up to speed on the foundations and the basics of everything. So, okay. All right. Well, I thank everybody for being here today. Again, the lecture has been recorded. You know, again, I'm making a copy right now of the chat so that I have record of all of that everybody put in there. Okay. So I know. If you didn't get in the chat and you want to email it to me with Bob, I know a few of you have already done that. That's great also. Okay. So we'll do that. And otherwise, we are in good shape. I hope everybody has a great weekend. Again, for those of you that are football fans, I'm a Chiefs fan. So I would hope that Sunday night you'll be cheering for the Chiefs to beat the Packers. But seeing we're in Western New York and it makes everybody's disposition much better, let's cheer for the Bills on Sunday. A nice home game. Hopefully the weather's good. But I don't have a window, but looking outside, it does look sunny, peeking through the door there. So enjoy the day. I will try and see. I have a little bit of time right now. I'll see if I can get this clip done and try to get it out to you sooner and get you the homework so you got some time this weekend. I know tomorrow's supposed to be a little raining. If you're not going to the Bills game, you do have a half of football that you can do homework in because they tend to play one half better than the other. But we'll get you going on that. And again, if anybody's having any problems, please, if they're not getting this, please make sure that you get to me information that you'd like to do one-on-one. You know, if you want to come into the office, I need to have you have this foundation going so that everybody's in good shape. Okay? Again, thanks for being here. Let's see, I did have one more message. How long do you keep the recordings active? They're active for quite a while. So even if you want to go back and look at some from last year, it's tough last year's because the tax law is different. The past ones, you know, are up there too. So, all right. But otherwise, everybody have a great weekend.